The bond market witnessed mild activities this week despite demand for the 2042 and 2050 maturities, which saw bids at 15.6 and 15.7%. Chuka Nwachukwu, head of ALM and balance sheet management at UBA, joins me for a wrap of trading at the market this week. Chuka, thank you for taking the time out to join us today.
Thank you, Esther.
At over 15%, I was just thinking that perhaps that would have been, very attractive to investors.
Yeah, that's why we saw a lot of demand during the week on those longer end of the curve, like you mentioned, 2050 and then 2042. It's quite 15% is quite attractive to investors.
Bring us up to speed on market trading today across the different segments.
Okay, so let me start by during the week. So we saw MPC move rate 50 basis points from 18 to 18.5. And then on Wednesday, we had a NTB auction where 180 billion was on offer, and then subscription was well over 800 billion. And so that has actually affected the sentiment in the market, because we saw a lot of bullish sentiment from those who lost at the primary auction coming to the secondary market to fill in their orders. Another significant thing again is the fact that the system has been highly liquid. FAC came in at the beginning of the week, and then that has actually affected a lot of that's actually affected the trading especially as regard the rate. So we saw a lot of banks trying to to unwind the liquidity in order to just avoid the CRR debit.
I'd like us to just chat briefly about the MPC meeting and the outcome. As you said, 18.5% is where we are now. But just trying to remember some of the comments of the CBN governor. One that stuck out for me was where he said, where he alluded to the fact that monetary policy transmission has been weak overall. However, there has been an impact on inflation, bringing it down, albeit slowly and more on a month-to-month basis. Just trying to get your thoughts on the outlook for inflation, keeping that in mind when the monetary authorities themselves are saying, look, many of the issues are non-monetary and beyond the reach of the monetary authorities. So where does that leave the outlook for inflation going forward?
We expect that inflation will keep moving up, but with slight moderation. You've seen the figures that came out, the last inflation, 22.22%. And so, like you rightly said, most of the issues affecting inflation are beyond the government control. And then you notice that the CBN governor also alluded to the fact that as long as inflation continues to increase, CBN will continue to react. However, I'm sure that most of the reaction is going to be in a moderate form. So we expect this inflation to increase further, and then we expect CBN to also act further.
Let's talk about, you mentioned that the market is awash with liquidity. Are you expecting to see a significant amount of that liquidity leaving the market next week, or is it here to stay in the short term?
No, we expect this liquidity to thin out. Today, obviously, it's going to reduce. At the beginning of the week, we saw system liquidity around 535 billion. As of yesterday, it decreased to 250 billion. And so, with all the activities happening in the market, hopefully, by next week, we expect to see moderate system liquidity, and then the rate will obviously go up. Presently, the overnight is trading around 11.5%, and then once this liquidity thins out, we'll probably see a spike in the rate, maybe around 16 or 17%.
Right. Just curious to know, trends at the corporate bond market, what can you tell us?
There hasn't been much activity on the corporate bond market, even though that the yields are hovering within where the shorter end of the government bond is, around 11–12%. So, but I think the attraction is still on the NGM bond, and that's where the focus is for now.
Well, I mean, I guess a good follow-up question to that would be, what about the corporates who desperately need money? What options do they have? What commercial papers? What do they do?
I think what we aid the investment is what is happening on the TBO side, where we see we've seen the longer end close around the single digit, around the 7.99. They need to up the yield if they really want investors to come in. They need to match exactly what the government bonds are doing, which obviously I don't see them meeting that. So it's going to be difficult for them to be able to compete with the government bonds.
Oh, right. So I know there was a Smith's auction today. Do we have the results yet?
No, the results are not out.
All right.
Yet.
So, but for the FX market, what can you tell us in terms of how the Naira has been trading against the dollar?
Yeah, we've seen slight depreciation from 464 to 464.5. There hasn't been much happening on that end. It's just the fact that the demand still continues to outweigh the supply. So we see the FX market just hover around that 460 levels to 463, 464 levels.
All right. And now to wrap this up, of course, as you know, we're going to have a new president sworn in on Monday. How do you see the market trading in the coming week?
Yeah, markets in anticipation of the inauguration, our market has been slightly quiet, and that's why you see that there isn't much activity in the market. I believe that after the inauguration, then the speech from the president-elect, that will give further guidance on what the new government is trying to do, and that also directs decision on what will happen in the market.
Right. Thank you so much, Chuka, for bringing us up to speed. Appreciate your time on the show. As always, Chuka Nwachukwu, Head of ALM and Balance Sheet Management at UBA.